This is the year-end edition for 2013. Let's get after it. My name's Des Woodruff. I'm the president and founder of FreeTradingVideos.com Incorporated, doing business as Grok Trade, and this is the year-end edition for 2013. Traders cheered record-setting year on Wall Street for the 2013 year, and we saw some big-time advancements. Stock market posted its best gains since the 1990s, defying the skeptics and proving that the 5-year-long bull market is still alive. With that, I want to get into some information. Instead of just telling it to you, I want you to see it in all its glory. The Dow is up 26.5%, best since 1995. The Dow is more than 10,000 points above its 2009 bear market low. Pretty substantial. The S&P 500, which is the bellwether. This is the barometer we all watch. If you're a savvy trader and they ask, hey, what's going on with the Dow and NASDAQ, you always want to ask, what's going on with the S&P 500? 500, the blue chip, big companies out there, and it gives us a highly diversified group of stocks, not nearly as biased as tech-weighted NASDAQ, and there's only 30 in the Dow. So there's 500 here, not too bad. Anyway, up 29.6%, best since 1997, which closed out the year with a fresh record, only the 6th time that has happened in history, according to the S&P Dow Jones indices. It posted 45 record closes, the most in 15 years. So that is incredible. 45 times had record closes, the most in 15 years. NASDAQ up 38.32%, best since 2009, which is the 7th biggest annual gain ever. And the Russell 2000 has more than 30%, which is the best since 2003, finished at a new record high. So, take a look here at the markets. I do want to show you, before we get into it, sector rotation at FinViz. And for the year performance, conglomerates, which are large companies, the entrepreneur types, up 37.2%. Services up 36.5%. Healthcare up 35.6%. Doing really well here, you can see. And then we have industrial goods up 32.4%. Technology up 25.4%. And financials up 23.5%, with the consumer goods up 17.1%. Utilities not doing so well. It's more of a defensive sector. Basic materials not doing so well, up just a mere fraction. For the 6 months, you'll see that financials about the same place for the year. If you look for the 3 months, financials a little higher. So it's 1 month performance here. You'll see that financials are increasing higher. And for the week, this is only Friday, January 3rd, 2014. For the week so far, see financials at break even, with consumer goods, utilities not doing so well. And take a look here at the monthly chart of the S&P 500. You'll see that since 2009, we went higher here. Little pullback 2010, higher in 2010. Pullback in 2007, and then, or 2011 rather, 2012 we go higher, some chopping around 2012. 2013 was gangbusters year, as we just explained. The question is, what's going on? And this is what I see. We are very, very extended here. If I look, I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months in a row going straight up. That's an anomaly. It usually doesn't happen. Last time we had a big run like this, only gone up, let's see, 1, 2, 3, 4, 5, 6, 7, 8 before we had a nice correction. You just don't see big runs. Here we gone up 6, half dozen or so. Here we gone up 3, 10, 11, almost 12, and then sideways for a while. But that's what we're dealing with right here. Same scenario. We're looking for a pullback, and we're at a big-time resistance area with 2 major trend lines coming up higher. Support here, resistance. If I bring this to a line chart, you'll see there's resistance right here. We're below that resistance point. Here we have support, resistance. We're below that area also. So I think we're going to pull back. So here's my big call for 2014 when the year ends. I think we're going to be at 1702, and that will be for the close for 2014. I think we're going to chop around and drop. Actually, I have a chart I'm going to share with you at the end of this video that shows a chart outlook going out 8 years on what I project to happen, and I will go on record showing this. Anyway, now we're going to take a look at the Dow. The Dow, you'll see how we are above resistance. We're hanging out here on a monthly chart. Month is just getting started here, but if we can stay above this line, that would be very good. If you go here to the NASDAQ, this is problematic. We have support here, resistance here. We're at major resistance. We're very extended. I fully expect this market to pull back. If the NASDAQ pulls back, you'll see the S&P and the Dow probably follow suit. You're going to see a pullback to the rising 20-month moving average, which is going to put us a pretty significant little pullback here, probably at around a 37 to 50% Fibonacci retracement. I see us getting to this level. I see us getting around the 3650 area. So be watching for a big pullback here. Russells, same thing. If you go back in time, this goes way back, 2003, support. We come here to resistance 2008 before the big financial crash. And we come right here to today, beginning of 2014. Major resistance. This is huge resistance, very extended, very overbought. The markets are due for a big pullback, especially after a hanging man candlestick reversal pattern here on the Russell's 2000. We're looking for a pullback to the rising 20-day perhaps or 20-month moving average, and we have to be giving some back, and I foresee that taking place. The bank's monthly chart still up here. We popped up above resistance. Now we're finding some support. That's very good. We need to continue above this blue line. Gold monthly chart is above resistance. It is looking for a buy opportunity. I see gold only going higher from this point forward. Silver, same thing. I see silver only going higher from this point forward. I think these are great buying opportunities for silver and gold. You're hearing it here at Grok Trade. And then we're going to move over to the S&P, but now we're going to go to the weekly chart. The week has now ended at the first week of January, and I want to show you this. We're at a resistance point, but we got a close here on the S&P just below what should have been support. We closed below that support. It looks like we have a lot of downside potential here with a bearish divergence here on the MACD on the weekly chart. I think the next few weeks could be brutal. If you go here to the Dow has popped higher. Now we close with the doji as a reversal type candlestick. It's indecision. Look for downside potential. I see us getting down and challenging 16,000 relatively quickly. NASDAQ, big time resistance. I see us challenging 4,000 relatively quickly. Watch for the weekly charts to start breaking down. Russell, same thing, at major resistance. Watch for a pullback. I think that we might even challenge 1100 fairly soon. So be watching that. Banks at big time resistance, and we're already retracing. We will more than likely drop, maybe getting as low as 2,500 on the banks. This is big time dangerous area with a huge bearish divergence on the MACD centered oscillator, and we have a rising wedge with these two trend lines. And go to our chart school to check this out. Just go here to the website, go to the chart school, check out rising wedges. You'll see that those are bearish, and if you have a divergence at the same time, this could be a nasty little drop. The VIX, which is the fear indicator, where we hit support, we go higher, that fear rises, that means the market goes down. We get to this area, we go higher, the market drops, but the fear increases. Here, fear increases, the market drops. Here, fear increases, but and the market drops. We're there again. So fear should increase and the market should drop. So that's what we're looking at, the fear indicator. I'm going to show you my prediction going into the next 8 years. Share this video with all your friends. This is a very, very good video and very educational. And anybody that knows anything about trading will find this technical outlook fairly helpful. Now, anything can happen in the markets, and we can only assume that anything can and will happen in the market. So this is only a guess, but it's an educated guess based off of trend lines, support and resistance areas, Fibonacci type numbers, and I've incorporated that with my own drawing. If you look here, this goes back to 2000. 2000 goes to 2013 into 14 where we are now, and then we end. So the date right now, well, I have it set to February 1st, but we haven't got to February 1st yet. And so you'll see that we close right here starting the 2014. And again, today's date is Friday, January 3rd, 2014. What I foresee happening is a pullback and a little bull flag being created. By the end of 2014, I think that we are going to hit and close around 1702. And then from there, we'll bounce higher. But then after that, I think when we go into 2015, that we have several years of a pullback, usually 3 to 4 years before we bounce and go higher. So it's a significant drop in the markets, much like the drop we received from 2000, 2003. I foresee the same thing happening after 2014. So let's see if that comes to fruition. At the website freeonlinetradingeducation.com, make sure that you sign up. This is free. Learn to Trade, 6 easy lessons. You will be emailed videos that you can watch to your heart's content. You can download them. They are yours to keep. Just sign up here and get them. And what you also want to do is get a hold of once you do the 101s, you will be perfectly prepared and ready for the 201 courses. It's designed to take the 101s first and the 201 second. Once you click on the 201s here, you want to get registered for this. Now listen, I'm going to give you a special deal. As some of you found out here as of recently, the code is still active. So what you want to do is click here to buy the very intuitive and very strong. What you will learn, look at all these things. It's over 6.5 hours of tips, tricks, and secrets to trading. And we take our education very seriously. And you want to go through this training, and it's a home study that you can take yourself, and you will get it immediately upon signing up. It is awesome, awesome, awesome. $2,500 value for $697. But I'm going to knock $300 off of this. It's like a 40% discount. All you do is you type in Grok 300, all caps, Grok 300, and it is yours right now. So we will be turning that off. Use it or lose it. There's your opportunity. Thank you so much for being a part of this training video. We give you the very best technical analysis, or at least that's what we attempt to do, and I think we do it very well. I am a pioneer at doing these videos. I've been doing it before anybody else has been doing this. I started around 2004 doing daily, regular trading videos. So when it comes to technical analysis, very few people and very few gurus out there can compete to this level of technical ability and skill sets, and we give it to you free every day. So if we could be of more service to you, please let us know. Take care and very safe trading to you going out to the rest of the week, the rest of the month, the rest of the quarter, and the rest of the year.